Hello, folks. Welcome back to this week's Forex commentary. Of course, we're discussing dollar index and the euro dollar. Last week there wasn't so much we discussed on the commentary in DXY because price action hasn't been apt this year. So I've just been a skeptic this season about the dollar index and whatnot. So but whenever I look at the monthly time frame and I look at you know December's candles range with respect to January's trading, I mean the only thing that runs through my mind is February is supposed to be a bearish month, right? But we haven't seen that express itself in price action. Okay, so when we go to the weekly time frame, if we look at the weekly chart on DXY, we see from last week's trading, which wasn't really given, because it's very easy to say, okay, we ran buy side liquidity here, buy side liquidity here, and we draw into this rejection block, okay, and it's giving off signal that okay, we're going to have a bearish week this week itself, okay. And mind you, we have a swing low here already. Regardless of how this candle is closing, we have a swing low here, and if this is a swing low, this week has the propensity to return into the previous weekly high, okay. It has that much propensity. And now I was saying something last week in the commentary, saying regardless of all the price action we're seeing dollar index, if she can manage to return back into this high and we begin to reject off of this weekly bearish order block, okay, because we've been looking at this weekly order block for weeks now, then I can be satisfyingly or convincingly bearish on dollar index. I was trying to find something in my dictionary, but I think that was kind of like difficult for me. So yeah, we have this swing low here, and this is not satisfactory really, because price action has been a mess, and it's hard to trust just about anything you get, and you just have to remain nimble. All right, so on the weekly chart, we don't really have much data here discussing price action, so that's why I think we'll just go to the daily time frame and have the bulk of the discussion in daily chart. So I've always talked about DXY, and I said how we are in consolidation, right? And because of that, these rejection blocks are going to play a key role in understanding price action, okay. When we discussed the commentary last week, we talked about this rejection block, how it could make prices return back into the new week opening gap, because there was a large range expansion last week Monday, and we wanted to see price first return back into the gap. So we talked about this rejection block and all of that. Now if you notice something, we traded above buy side here, we ran through sell side here, okay. So we ran buy side here, we traded through sell side here. So now this swing point in itself is high risk. And what do I mean by high risk? The market is going to find difficult running through this high because this is high risk. So first, they go to it, mitigating it. Now, mitigating is a very easy concept. It's how you describe a level of high resistance liquidity run becoming a low resistance liquidity run. Okay, I'm repeating it because I have new viewers and followers online. So just when I mention these things without explaining myself, I don't leave anybody in the dark so that they can catch up, even if they have to pause the video and think about it, for a couple of, seconds and stuff like that. Okay, so a level that has had this transaction between opposing liquidity pools. What do I mean by opposing liquidity pools? Here we have buy side liquidity here, and we have sell side liquidity here. So market has run through buy side here and come down to run through sell side. This swing point and this swing point, let's discuss the swing point first, is high risk. So you can see how market is failing to run through this high. And that's what, folks online talk about. The call, is it strong zone? Oh, protected high. Oh, but they only talk about protected high from the lens of, you run, I think they say it's as much as this. I can't remember. I don't really, don't go digging too much in their content before I get lost in words and all of that. So you can see this high level here is high res. Look at the rejection block here, extend it forward, right? And when we look at these two, okay, you can see we had, a transaction at sell side here and transaction at buy side into this rejection block. Now, when it comes to liquidity runs, we treat rejection blocks as though we treat, old highs and old lows because they serve the same purpose, okay? So when we are seeing the market run into rejection blocks like this, even though we know that, prices run through an intermediate term high here, okay, we want to look at these as running buy stop. And where is buy side liquidity resting? At the bodies of this candle. That's how we want to visualize. So that's how we visualize rejection blocks. Okay, so this level here too is high res, and the market run through here, which is high res, mitigating this high and returning back into the range here. Now, do we expect the market to run through this low? No. Why? Because this level here too is high res. So the process of this mitigate this swing point. Okay, and we have, Friday's price action where the market returned back into this daily fair value gap. And there was a reference here because I think I posted this on my Twitter account talking about this for fair value gap here. Yeah, I posted. Let's take this off. Okay. So I posted this on my Twitter account talking about, markets returning back into the forward gap. And since I didn't see the market returning to the forward gap, I, just anticipated Friday would be the day of week they return to the forward gap. And you can see the manipulation from non-farm payroll. This is why I do not suggest to trade the news. Of course, you can trade after the news event because they got close, rejected around previous day's low, and consolidated and settled bullish, okay, above this candle's high. Okay, so this is the sign they're going to return back into this forward gap. But no interest at all. I just witnessed non-farm payroll, and I turned off my computer and just went to rest. I mean, it's the weekend. So yeah. So now what we're looking at here on the daily chart is what is market going to do, because now that prices have traded into this high here, okay, this level itself has become a low resistance to go run. Although this level here is high risk because we have transaction at what? Buy side liquidity here, buy side liquidity above this high, and sell side at this rejection block. Okay, so but if you look at the price action around here, because if I'm gonna be bullish, sorry, if I'm gonna be bearish on dollar index, okay, I want to see Monday's candle. You see, we've traded above previous day's high, which is Friday, and I want to see Monday close bearish inside of Friday's range. Then that's something really. But do I think it's gonna happen? Well, I really do not know, because now we have this long wicks here, this rejection block, and whenever you see rejection blocks, the markets are likely to draw into the bodies of the candles. That's very, very normal. Okay, when you have rejection block, the markets are always likely, to draw into the bodies of the candles. Okay, So that being said, okay, we are in for a treat because this week is CPI, and you know we have CPI coming this week. Normally we always look at this news event to clear things up, but I don't know if they've been clearing things up for the past couple of weeks because it's just been consolidation. Because this is consolidation. Okay, we're just moving in between levels and stuff. Okay, so the closing basis above this fair value gap, this daily fair value gap, is gonna give off, Tuesday as bullish, and I think Tuesday is CPI. I don't know. I'm gonna confirm. You can confirm my end for the economic calendar, and we can confirm my end and see where we're at, and you know, and that's why yesterday I posted on my Twitter account talking about DXY and what it looks like, you know, saying in anticipation of this week's commentary, what does this look like to you? Okay, so normally I check the timeline, and I was seeing a lot of posts, everyone anticipating, sell side from here, and I had a few conversation with folks here, talking about how dollar, I favor upside on dollar index, and let's see Sunday's opening range. I think we've seen Sunday's opening range. Sunday's opening range on dollar index is bullish. We've seen this Sunday's opening range. Okay, so we just want to see the dollar index close. CPI is Wednesday. We just want to see the dollar index close for today, and then we can now determine how Tuesday's price action is likely to move. Mind you, I said when we have long weeks like this, the markets are likely to return into the bodies of the candle. Okay, they are likely to walk this week, and since we're coming from a discount, okay, if you measure from this high to this low, we are not even yet at 50%. Okay, so this is 6.8%. So we are coming from a discount from this low here to this high here. So we are a discount, and look at this is what I was talking about, dollar index being bullish. We are a discount, and prices are running below previous day's low and closing above previous day's high. Now previous day's high is 108, okay, 108097. The closing price is about 1.096. This is 097. Wow, we have a point. All right, I thought, just merely looking at it, because it has volume, so it's very easy to trick the eye. So we're closing at the previous day's high. This is bullish. Anyways, we can see that the opening range today is bullish, and we kind of like traded above previous day's high. So this is bullish. So this is what I was talking about. Okay, why everyone online was tweeting, dropping their analysis and saying the extra will just sell off from this gap, and now Sunday has opened, everyone is scared now and saying what's going on. Look at the price action. So this is how you want to determine price action. You want to look at candlesticks and all of that. This is how you study price action from the lens of the high time frame institutional order flow. Okay, you want to use concepts such as liquidity runs, and you want to really study the open, high, low, and close of candlesticks. So we have a bullish opening range. Like I said, we're going to allow Monday's trade to pass, so we can determine what dollar index is going to do near term. Okay, I talked about how the markets are likely to dig in this rejection block, and you can see this highs here. Yeah, low resistance to quick run. Okay, and what it will take the markets to see sell side is, if after, since we traded previous this high, markets returning back into Friday's range. Well, that's something you might want to look at. Okay. So there's this market. I did analysis recently on this market, and it's the US oil. I know last week we talked about gold, and we had a beautiful, expansion last week on gold. So I would probably look at gold again during the pre-market. Not really interested, so interested in always discussing gold for the weekly commentary. But this is a guess pair, and I think this is going to make sense because um, the way to make easy money in markets is really if you look at markets that are really one-sided. Okay, one-sided markets are very easy for you to make money. Okay, you don't have to be you don't have to always figure out what bias is every single day of the week, and that's what Euro USD does to you because of the markets in consolidation and periods when you're even supposed to make money, you probably can't because um you are sticking to your rules like time of day, day of week, the economic news reports and all of that. So we have the drawn liquidity here, this fair value gap on crude oil. So this is drawn liquidity quickly. I don't want to spend too much time here. And the market's traded into a premium, a short-term premium. Where's the premium? You can see this high to this low. Okay, if you measure it, you see we went into a premium market 16%. Okay, which makes a whole lot of sense. And if you look at market structure here, we have high, low, lower high, lower low. Okay, we having a bearish market structure. Okay, this is the drawn liquidity here. So on the weekly chart, it's amazing that the past couple weeks we've seen really bearish trend established on crude oil. Okay, after we ran into premium, ran above low resistance liquidity run. Okay, this is low resistance liquidity run. What's low resistance liquidity run? Markets find it very easy to reach for buy side liquidity here with these highs. Okay, that's why it's low resistance liquidity run. Okay, apparently on the first try you can see how markets failed, trade into this fair value gap and ran into sell side. Now when markets trade into fair value gaps, most of the time basically when markets rebalance inefficiencies, those swing points itself, they're high risk. Okay, so there are different modules you can use to determine or describe swing points. You can describe them with respect to inefficiencies and you can describe them with respect to liquidity. Okay, but that's not the subject today. And you can see we've been having bearish price action. Oh boy, look at this. I mean, we've seen something like this on dollar index on the monthly time frame, and you can see we're still struggling to print bearish February month. So you can see how we use data to influence our analysis, and that still doesn't mean it's 100%. This is exactly what we're talking about. Okay. Anyways, last week was very good. You can see how crude oil ran previous weekly high and still posted more downside. So the only PD array here on the weekly chart has got to be the previous weekly low. Okay, so we want to see what market does, see if there is any willingness to return into the previous weekly low, into this daily. We have some daily key levels here. We have this daily bearish shadow block, or you can call it a breaker because this is a short-term low, and before the run on buy side liquidity here, previous weekly high, and we want to see markets return here, and then the daily time frame validating buys, and then subsequently we can go in for bearish on crude oil, and it's a potential short-term trade. Okay, and that's why I'm just calling attention to it for those that trade crude oil. This period I'm looking to segue into other markets because it's been really frustrating trading euro, giving off market structures, though, we're going to be one-sided because, you know, institutional order flow is, bearish for dollars, but we are not seeing it reflect. So now we have to be careful. So you can see that we had an opening range gap. We had a bearish opening range on Euro USD, and this is how we're going to approach price action at the right time of day, okay? Because time is a very crucial factor in managing expectations and adaptability in markets. Okay, if you want to adapt, you have to you have to understand the time concept of forex. Okay, so here is it's not reflecting, so I'm going to even take it off immediately. I've changed my mind. I'm going to use a rectangle tool. You're already messed up. So here is the opening range gap. All right, and you can see this market's always gapping overnight and stuff like that. So we have the opening range gap, and sorry, we have the opening range gap on Euro USD. So when we have stuff like this, and we're talking about potential DXY is bullish because it has a propensity to draw into those daily rejection blocks I was talking about. Okay, and this is euro on the intraday time frame. How do I interpret that, or what am I going to be looking out for based off of the information on the daily chart from dollar index? Well, say they close this gap, you can see there's a near short-term high here. We want to see them utilize this gap as resistance. Okay, so you run through this high at key time of day to soup for what? More downside. That's if DXY is bullish, and that's why I want to see Monday's trading validate my bias. Okay, if Euro USD utilizes this opening range gap and goes lower, so I'm gonna go in on Tuesday looking for lower prices on euro. Okay, but if we begin trading above, then that's not a bearish signal for euro USD. That's not bearish. Okay, so that's this simple model the algorithms use when there is an opening range gap. Okay, when there's an opening range gap, you return into it. You can grade the gap into quadrants and just make it easy into the midpoint and all of that. So long we're staying below the midpoint after this has been completely rebalanced, okay, that's a bearish sign. Okay, so markets closing above this rectangle, this opening range gap, is not salient to a bearish price action, and that's why you have to be specific with your expectations, and that's why we want to use Monday. I want to use Monday's trading to validate our bias and all of that. So I hope you found this one insightful. Until the next one, be safe.